Hey everybody, it's Dan Kwok here, one of the Kwok Brothers. Now, a lot of you guys know that President Biden has a proposal of increasing the top capital gains taxes from 20% to 39.6%. And that's just the federal rate, so if you include the state rate in there as well, certain states like California may pay closer to 60% capital gains taxes. And yes, this capital gains taxes only apply to individuals making over $1 million. Now, we have yet to confirm whether this is an AGI number, an adjusted gross income, or an actual gross income. Now, my guess is that the tax increase will only kick in if your adjusted gross income is over $1 million. Let's say your investment or business made $1 million, but you had close to $900,000 of business write-offs and deduction. That ultimately means that your net income will be $100,000, which technically you didn't make $1 million. Therefore, you will not pay the increased capital gains taxes. Now, that's what I'm hoping for, and that's what I'm guessing, because it doesn't really make sense mathematically if it were to apply on gross income. So back to the latest news, President Biden is already thinking about taking the effective date on the increase on the capital gains taxes and retroactively make it effective starting April 2021. So if you recently sold a property or an investment and you're making over $1 million AGI, well, it's kind of too late and you may end up paying the increased capital gains taxes if you do make more than $1 million a year. Now, of course, all these tax increase proposals are to ultimately fund Biden's plan of passing the American Families Plan, which ultimately includes 4 more years of free public education. It takes the top ordinary income tax rate from 35 to 39.6%, making sure that all Americans press the like button on this video, and of course increase on earned child tax credit. So the ultimate question is, why? Why is Biden planning on taking the capital gains tax increase and retroactively making it effective starting April 2021? Well, it turns out that historically, whenever the capital gains tax increase were to be announced or there's a proposal, the investors will frenzy to sell before the new capital gains tax would increase. So going back to 1986, when the capital gains tax increased from 20 to 27%, there was a 60% increase of capital gains acceleration, which means that more and more investors were selling their assets and their investment so that they can avoid the increased capital gains. Likewise, back in 2012, when the capital gains rate went from 15 to 25%, when that proposal was announced, a lot of investors jumped ship and started selling like crazy. So of course, the government has figured that out, and my guess is that Biden does not want that happening again and wants to avoid investors selling off early just so that they can cash in at a lower tax rate. So at any given point that if this proposal were to get passed anytime this year or next, well, pretty much everything you sold throughout April and on will be subject to a higher capital gains tax rate. And of course, just as a reminder, this will only apply to individuals making $1 million or more each year. But of course, just like what I mentioned last time in my last video when I talked about the increase of capital gains taxes, just because it doesn't affect you directly, it doesn't mean that it may affect you indirectly. And of course, my guess and my opinion is that it will indirectly affect you, because as soon as the institutional investors and these large investment firms start to cash out or take other measures, it could certainly have an impact on your investments as you're in the market as well. So not only is this a bad news for big-time investors making more than $1 million adjusted gross income, this can certainly be a bad news for little guys as well, because at the end of the day, we're just small fishes swimming around in a giant, vast ocean with sharks and whales. And if it's gonna ultimately hurt the whales, then it may hurt us. So I don't know what you guys think about it. Go and comment down below. Will this have an impact on the smaller investors? I think it may. I think it's definitely going to have a trickle-down effect as far as little-time investors and mainstream investors as well. Now, you think that capital gains tax is the only bad thing and the bad voodoo that's happening right now? Well, think again. Biden's administration and the proposal is increasing the IRS budget by $80 billion to track down and increase audit activities. Well, that makes sense, because as tax rates increase or new taxes get implemented, there are going to be more individuals and organizations seeking ways to avoid the taxes through loopholes and special interests. So I can see why Biden is also, at the same time, while increasing the tax rates and implementing new taxes, will also increase the budget of the IRS to make sure that policies and audits are being implemented to ultimately stop erroneous or fraudulent tax returns. And again, this will certainly affect you, because this will increase the overall volume of audits happening across all taxpayers. And of course, if you're making more than $1 million, you're a business owner or an investor, I could definitely see audits going up due to this new proposal. Now, of course, to add insult to the injury, Biden plans on eliminating or least decreasing the powers of the stepped up basis. Now, of course, for those who don't know what stepped up basis is, let's say that you own $5 million worth of investments in assets, and you die and it gets passed on to your heirs, whether it gets liquidated or it's a direct transfer. Now, a lot of times, any gains that you've earned in those investments, you will not pay any taxes, or at least your heirs will not pay any taxes because you'll be dead. And essentially, you dying will wipe away any taxable gains at the time of transferring those assets to your heir. Well, Biden's proposal is to close that loop and say, you know what, we're gonna put a limit on how much that could be. Now, of course, there are exceptions, such as if you own a personal home and that gets passed down to your kids. Of course, that won't be subject to any capital gains taxes. But right now, the proposal on the table is that if they are a single filer, then they can claim up to $250,000 exemption. Anything more than $250,000 of gain will be subject to taxes with the capital gains tax rate. And of course, if you've been filing taxes as a married or joint couple, then that limit will go up to $500,000, where any gains within $0 to $500,000 will be non-taxable, but anything above $500,000 would certainly be taxable as capital gains. So it certainly does diminishes the benefits and the effects and the features of stepped up basis. So really, after you die, the government's got to have your money, and that's what this is all about. So that is the latest news when it comes to Biden's proposal on not only capital gains taxes. We haven't even talked about 1031 securities exchange when it comes to real estate. We talked a little bit about the stepped up basis and how that might be eliminated. So guys, tell me what you guys think about all of this. Go and leave your comments down below. And of course, don't forget to subscribe, guys, because we are going to be providing videos and updates as far as building your personal wealth, creating financial freedom, and ultimately helping you guys creating the vehicles to those successes. So that being said, guys, stay tuned. We'll get to you some more update. Go and comment down below whatever you guys think, and we'll see you in the next video.